Master your money, free your future. Welcome to Budget for Life. My name's Jeremy. I'm not a professional YouTuber. I'm a financial advisor, but this video is not financial advice. In this video, we are going to cover everything you need to know about GameStop's PowerPacks. How is it accounted? We are going to learn at a high level, quickly, briefly. I'm going to summarize for you the 10 hours of research, literally, that I've done since I posted yesterday. I mean, stayed up all night, woke up at 3 a.m., stayed up for another 5 hours working more. I'm here to bring you the goods. If you appreciate it, would love a like or a subscribe on the channel. Thank you to those who have joined the channel as well as fans or as friends. I will, at the end of this video, share about our next sub club because we passed 2525 by earnings just like we hoped. And I want you to know what this next sub club is and all of that fun stuff will be at the end of this video. And I'll talk about it in future videos too. Let's get into it. Power packs. At a high level, what do we know? We know that PowerPacks is a joint venture. It is a partnership, a separate entity from GameStop. It is not a subsidiary within GameStop's operations. This is very different from GameStop's graded card marketplace and their PSA grading. When GameStop launched these businesses, they did it within their operations. The company became an authorized PSA dealer, right? Those businesses integrated within GameStop's core business. When they launched PowerPacks, it was not integrated within GameStop's core business, but was a separate entity. Two reasons we know it's separate. We know that it's not included whatsoever in GameStop's most recent reported numbers as far as their sales, expenses, etc. One reason we know that it is not included is because they say that the sales were not material in their 10Q, which means that they are not reporting the sales. If the sales, if the operation of PowerPacks was integrated within GameStop's core operation, they would not have the option to not report the sales. They would have to report the sales. The sales would be included in these numbers, no matter how small they were. GameStop would not tell us on their 10Q the sales were not material unless they were saying that the sales are not included in these numbers, and they don't have to be included because PowerPacks is not a part of GameStop's operation. One other easy way to discern this is it's not on GameStop's primary website. And if you are a GameStop Pro member, none of those pro discounts apply to PowerPacks. PowerPacks is separate, and the GameStop perks do not apply. You don't get GameStop's points for it, or perks, loyalty rewards, etc. It's separate. The most clear, obvious way that we know that it's separate is in their cash flow statement. GameStop had a $17.5 million cash flow of an investment into this collaboration agreement. This investment happened during Q3, not before. And GameStop's partnership with PSA is now 4 quarters and running, right? They announced their partnership actually at the very end of Q3 in 2024. And just now, right when they launch and scale Power Packs, is when we see this investment. And this investment was a cash flow from an investing activity, not from operating activities, right? These are all the operating activities cash flows, which includes all of GameStop's operations. Over here, you have investing cash flows, which includes GameStop's investments. PowerPacks is a separate entity. It is a joint venture, a partnership, an investment of GameStop and PSA's collaboratively. Collaboratively. So, what does that mean for how power packs are reported? Because even if it's just a joint venture, there are things that GameStop has to report. Let me dive into it. First, GameStop's share of power packs net income is included within other income. Okay? So it is right here, other income. GameStop's share of PowerPack's net income in Q3 was as high as $3 million. Dollars. It wasn't a cent more than $3 million. Dollars. It could have been less than $3 million. Dollars. I will dive into in a future video modeling the performance of PowerPacks for GameStop in Q3. In this video, I want to help you know where to look on coming balance sheets for the clues, right? The figures, the numbers of PowerPacks, even though they are not disclosed, they're not material. I'm going to tell you what that means. The reality is some of the financials are still reported. The first being GameStop's portion of the net income GameStop receives from PowerPacks. GameStop has to disclose this. They cannot not disclose it, and it will be an other income. It will not be an operating income. It will not be sales. It will not be an operating income. It will be listed separately within their other income. Got it so far? Got it. What about GameStop's investment in PowerPacks? When GameStop has to record an asset value equal to their capital investment into PowerPacks plus any additional capital contributions to PowerPacks plus any of their earnings, right? Their share of the earnings that PowerPacks has generated. I'll dive into it more in a minute, but let me just show you, okay? Other non-current assets. Okay. PowerPacks is not $54.2 million, dollars, but PowerPacks, as far as GameStop, how GameStop values their investment, it is lumped in within this line, this line of their 10Q and of their future 10Ks, other non-current assets, shows you how GameStop records the investment value of PowerPacks. This is the formula that you calculate that investment value. Basically, it is not the market value. It's not a marketable security. It's the value is the total money of equity that GameStop has contributed. So if PowerPacks is booming in sales and obviously the enterprise of PowerPacks is becoming worth more and more, that would not increase GameStop's book value for the business. They would only increase their value if they sold the business, right? Then they would have a gain that would then increase their assets on top of book value. But book value is just what they paid to launch the business, and it's hidden within other non-current assets. It's not market cap. It's just the money that they started it with, plus the income that they receive, right? Their portion of the net income, assuming that it wasn't paid to them in a dividend. If it was paid to them in a dividend, it would actually lower the non-current asset value. It would take that money out of the value of PowerPacks. It would take the money out of PowerPacks and put the money into GameStop. So a dividend from PowerPacks to GameStop would actually lower the asset value of PowerPacks on GameStop's balance sheet. But net income, right? GameStop has to report the portion of PowerPacks net income that is attributable to GameStop, even if GameStop doesn't receive this money. So it's like non-cash income. And whatever portion of income, like whatever portion of this $3 million of income is attributable to PowerPacks, assuming GameStop did not receive it in a dividend, they would also have to increase their non-current asset value attributable to PowerPacks by that same dollar amount. GameStop's share of income also increases GameStop's book value for the investment. It's just the total sum of cash that GameStop has put in, not as operating cash, but as equity into the business. Stay with me. It's going to make sense. And I'll repeat myself to make sure you understand it. And if you still have questions, let me know in the comments. GameStop's contribution, let's say they give cards to PowerPacks, which we know that they do because we've seen it at the end of Q2 we saw, and at the end of Q3 we saw huge drop, like thousands and thousands of cards removed from their graded card inventory in a day, right? Right before the quarters ended. So GameStop sweeping some of their graded cards and moving them over to digital power packs. Well, when GameStop takes something that was in their operations and they take it out of their operations and they move it to this joint venture, what happens? They lower their inventory by whatever the inventory value is that GameStop sweeps out of its business, they would lower that inventory. Whatever the value of that inventory is, the book value, GameStop's cost of that inventory, if they if they send that to PowerPacks, that would increase their non-store related SG&A. So right here, non-store related SG&A will increase dollar for dollar for every dollar of inventory that GameStop sends to digital power packs. It will lower GameStop's inventory and it will raise GameStop's non-store related SG&A. These are just the rules. It took me so long to wrap my mind around all of this. Hopefully you're learning it. Lastly, the only other thing that we will see until materiality is reached is GameStop's additional cash invested in power packs. That is listed in the investment activities in the cash flow statement. Not in the operating activities, but in the investing activities, you will see the investment of cash into power packs. Now, if this was investment to increase GameStop's equity stake, right? If GameStop was purchasing more units, more shares of the entity power packs, then this also, dollar for dollar, would increase GameStop's book value for their share of power packs, which would be hidden within their other non-current assets. But if this cash investment is actually for power packs to use within GameStop's operations, aka if GameStop sent money to power packs for any other reason, primarily you would assume for power packs to buy more inventory, that would not affect GameStop's asset value for the operation. Got it? If GameStop invests cash into power packs for power packs to use for operational purposes, the contribution does not increase GameStop's investment value on the balance sheet, and GameStop does not have to disclose any information about how power packs used the funds. These four figures, GameStop's share of net income, GameStop's investment value, GameStop contributing cards to power packs, GameStop contributing cash to power packs, all of these figures right now already, they must be recognized in GameStop's financials, even if it's literally just $1. These four figures are not optional. And materiality does not affect this requirement, or these requirements, I should say. But none of those are ever intersecting with GameStop's operations. GameStop's inventory is never overlapping. GameStop's sales is never overlapping. GameStop's cost of sales and gross margins never overlapping. GameStop's store-related SG&A never overlapping. All of these numbers absolutely do not include digital power packs numbers. And they never will. Not even when materiality is reached. GameStop's share of PowerPack's revenue, expenses, assets, liabilities are not included in GameStop's balance sheet. And they never will be, even if PowerPacks is doing $1 billion of sales, they will never be included in GameStop's top line sales number. They will never be included in GameStop's gross margins. PowerPacks LLC is treated like a separate entity because it is. And from GameStop's perspective, GameStop just reports the asset value and the income from that asset. They're just reporting what they have to report about the earnings generated from their equity investment. They are not including this investment within their operating numbers. Now, if PowerPacks had done $1 billion in sales, they would have accomplished materiality. So, what would happen then? At that point, additional financials about PowerPacks, primarily a summarized balance sheet and summarized income statement, would be included in a footnote. But the numbers would still never be aggregated within GameStop's operating numbers. At no point will that happen unless GameStop buys PSA out. But I don't think that's even in GameStop's best interest. It's probably in GameStop's best interest to maintain PSA's interest in the partnership for the long-term success of the partnership. So once materiality is reached, we will not only have those four things I talked about, we will still have them though. We will still have every quarter some other income, if there is any, from digital power packs reported in GameStop's other income. GameStop's asset value for digital power packs will always be included within their other non-current assets, unless one day they make another line to highlight it individually. But that would be GameStop's choice. They would never have to do that. We will always see when GameStop gives cards to power packs, it increase GameStop's non-store related SG&A. And we will always see if GameStop sends money to PowerPacks, we will always see that as a cash flow from investing activities, even if it was just $300,000, right? Even if it was a tiny amount, it will always be its own line visible on the cash flows for investing activities. No matter how big or how small PowerPacks is or becomes, we will always have those numbers. Once GameStop once PowerPacks reaches materiality, we will see in the footnotes under their earnings statement, we will see a more condensed version of PowerPacks earnings statement. We will see PowerPacks assets, expenses, sales, margins, profit, etc. We will see those numbers not included within GameStop's operating numbers, but as a footnote to get a glimpse for how fast it's growing, what the margins are, etc., to help us feel more or less excited about the long-term production of digital power packs. So what is the standard for materiality? Power packs is material to GameStop only when power packs assets, revenue, income from operations, or equity are equal to or greater than 10% of GameStop's. Any one of those exceeding 10% would trigger materiality. And something I hypothesized about in this video that I made yesterday, critical implications for GameStop's power packs. One thing I got wrong in this video that I've learned since then is that this 10% threshold is not adjusted for GameStop's ownership percentage of power packs. So, for example, in quarter three, if power packs had done 83 million in revenue, we would have seen a footnote. So it's not if PowerPacks had done 160 and GameStop's portion is only 80 and so it wasn't material. No, if PowerPack, even if GameStop only owned 1% of PowerPacks, if PowerPacks does 10% of GameStop's sales, earns 10% of GameStop's operating income, or owns 10% of GameStop's assets, or I should say, if the assets that PowerPacks owns are worth 10% of the assets that GameStop owns, or if they're equity, if GameStop's non-current, this one will will certainly be the last one to cross over materiality. But if the non-current asset value that GameStop lists for PowerPacks is greater than 10% of GameStop's equity value, any one of those crossing over 10% will trigger materiality, which will then mean that we see a footnote in the financial statements giving us a little bit more information about PowerPack's financials. Tracking? Hopefully so. PowerPacks will have to file complete, separately audited 10Qs, like their own bona fide financial statements, whenever either GameStop's book value carrying investment value is greater than 20% of their assets, or if their portion of PowerPack's income is greater than 20% of GameStop's income. So this 20% threshold is adjusted for GameStop's ownership percentage. So in quarter three, for example, assuming GameStop owns 50% of PowerPacks, which who knows, it could be 60-40. You know, we don't really know. I think 50-50 is a pretty good guess, right? But if GameStop owns 50%, then PowerPacks would have been required to file separate financial statements if PowerPack's income exceeded 16.52 million. That's because GameStop's operating income was 41 million. So 20% of that would be whatever, 8.05 million, right? But if GameStop only owns half of PowerPacks, then GameStop's portion of PowerPacks doing 16.5 would be 8.25, which would have been lower than that threshold. Another point I want to make, because GameStop mentioned that materiality had not been reached during the current fiscal year, and I was like, ooh, what if this is the most epic sandbag ever? Right? What if materiality has already been reached if we're just talking about Q3 revenue or income, but it's just not 10% of their full year, their year to date sales or income, right? Well, that was a dead end. Okay. Materiality for a 10Q is measured against the reporting period, not just the full fiscal year. So if PowerPacks had done greater than 10% of GameStop's Q3 income, but less than 10% of GameStop's year-to-date income, it still would have been considered material. GameStop still would have had to put more numbers in the footnotes, right? Again, materiality simply affects disclosure. We're just talking about these footnote numbers for PowerPacks, not consolidation. PowerPacks revenue will never be included within GameStop's revenue. Their inventory will never be included in GameStop's inventory, and only GameStop's portion of PowerPacks income will be reported on GameStop's income, but not included in their operating income, simply listed within other income. One last point I want to get through, and we'll wrap this up. We'll talk about some sub club. We'll let you digest this before I get into implications for their Q3 numbers. But at a high level, can GameStop minimize the visibility of PowerPacks? Yes. If PowerPacks reinvests all of its gross profit, all of its net income back into inventory to lower their net income all the way to zero, then under this equity accounting method, GameStop literally reports nothing on its income statement. Literally nothing. Now, technically, okay, as if we're talking about accounting rules, a company cannot legally lower net income just by buying inventory because inventory, you're just trading assets, right? You're upping inventory, you're lowering cash. So that's not an expense. It doesn't hit the liability side, the expense side. But net income would fall only if and when inventory is sold for a loss or written off for a loss. But wouldn't net income rise when it sells? Wouldn't you make a profit? Well, what's unique about PowerPacks is that the products are sold and repurchased several times before an end user ultimately keeps the card. The first time, for example, that a Chase card is pulled, PowerPacks recognizes that transaction at a massive loss, right? They received $1,000 in income for the pack, but the cost of the card is $12,000. That's an $11,000 income loss. I'm sure that over time, the more times that cards are instantly sold back to PowerPacks, likely the more profitable intrinsically they become for PowerPacks. And so that would get harder, right, to consistently hide net income just through scaling, but to lower the impact of this, right, to continue to minimize net income, to stay under those 10% thresholds and to grow as large as you can for as long as you can before having to disclose more to the public about what you're up to, you simply rinse and repeat, sourcing higher end cards, increasing expected values per pack, and creating higher tiered SKUs. Like, I don't know, Lunar, right? Remember the Pokemon Lunar packs that they literally just started in Q4, right? When you spend more on higher cards, right? And that card for the first time gets sold in a pack. You net that loss right away, right? The expansion of the cards initially, it only impacts the inventory like it only impacts inventory, it only impacts the asset level, but it would decrease net income via cost of goods sold when the card is purchased. So it's a pretty clean and quick reinvestment loop. Now, even if you disagreed with all of that, of course, PowerPacks could just lower their net income by spending money on all other types of things: talent, salaries, tech, platform, UI development, even acquiring supplier relationships, exclusive sourcing deals, right? They could give money to people that are getting inventory for them, right? Fulfillment, logistics, insurance, legal, content, YouTube creators, marketing, any other operating costs, right? They can spend it on anything they want to lower net income. And even if revenue was substantially high, they could still stay under that net income threshold for a very long time and avoid 10% materiality. This would also cause GameStop's investment asset to stay the same, right? The other non-current asset, the asset value for PowerPacks, if GameStop reports $0 in or sorry, if PowerPacks report $0 in net income because they're reinvesting it all into growth, then there is no other, where are we? There's no other income attributable to PowerPacks, which means that the non-current asset value doesn't grow. So in that case, the investment asset stays unchanged, the income is non-existent, and no disclosure is required other than just stating that the joint venture exists. And if GameStop never makes capital contributions, i.e., if their cash outflows are simply to increase, um, to fund operations, to increase inventory for PowerPacks, not to increase GameStop's equity stake in PowerPacks, then their investment asset can remain at zero, even if they're sending tens of millions of dollars to PowerPacks. For example, if when GameStop started PowerPacks, they decided to own, like they create the LLC, 50-50 ownership split, the initial capital contribution is zero, right? And then the agreement, the partnership could say that, hey, future funding will be operational contributions, not equity, right? You can create the shell enterprise and not fund it. So the starting asset value could be zero. And then later, once we're ready to start buying inventory, contribute funds to buy inventory, which would be an operational contribution, not an equity contribution. And if they continue to reinvest revenue to keep income at zero, then again, no equity contributions, no dividends. That would mean the investment asset could stay at zero on the balance sheet. The income could stay at zero on GameStop's other income. The revenue and expenses from PowerPacks are unreported. And the only disclosure that you would see is, you guessed it, the cash outflow in the investing activity. Wild, right? This is totally GAAP compliant if this is the way they set it up. And it's very common, right? Lots of companies do this to allow for large economic activity, major operational scaling, extensive reinvestment into inventory accumulation to occur entirely within PowerPacks while happening invisibly to shareholders and invisibly to short sellers, right? It is, if you think you've found something as a startup, right? Someone asked in a comment recently, like, why would they do this? Like, why wouldn't they disclose? And if you think you have found something, right? If GameStop thinks that PowerPacks is indeed a something burger and not a nothing burger, and they think they've created it in such a way that's very compelling, a very strong competitive advantage, and they think it's going to be a needle mover long term for their market share and for their um, equity value as a business, their ownership stake in this business is that important to them. It would be in GameStop's best interest to hide it within a shell company that's no longer a shell company, right? It's funded and performing, but GameStop doesn't have to report any of it so that they can widen their moat. They can widen the lead. The more months that GameStop can continue to grow this without competitors knowing how they're doing it and just how well it's going, the further of a lead they can gain on the competition and the closer to an unassailable lead they can really command, right? They can saturate the product and the market demand for the product. They can really solidify their position competitively. And if people knew, like if this just started, just in beta, with only Pokemon and football, in the first quarter, already doing tens of millions of dollars in sales, which, again, I'll save estimates for a future video. But if that's the case, it's in GameStop's best interest to keep that close to the vest, to keep not just short sellers, right? Not just like people trying to take advantage of the stock or something, but to keep legitimate business competition away from their goods, right? This is their treasure chest and they don't want anyone to know about it yet. A bummer for me, who was very excited, very pumped to learn so much about PowerPacks in GameStop's Q3 earnings report. Ultimately, I am learning much more than I thought I ever would. Just not quite what I thought I would learn at the time. Um, so we will solve for Q3 numbers in a video soon, but hopefully this was a nice deep dive for you about PowerPacks. Let me know if you have any questions. It's a joint venture. It's not within GameStop's operations. I found out where the financials will happen within the movements and the motions of PowerPacks that we do know, which is very key for future analysis. I did figure out that the materiality thresholds are not adjusted for GameStop's ownership percentage. So that is super important to give us a high end, right? GameStop can hide a lot of the asset value. They can hide a lot of the income, but I do not think they really can hide the revenue, right? So when the revenue, like what will force the materiality disclosure? It's almost certainly not the 10% asset or 10% equity thresholds. It's almost certainly either 10% sales or 10% operating income. And I would say it's more likely 10% sales. I'd say it's more likely 10% sales because operating income, GameStop can artificially, well, PowerPacks can artificially lower their operating income for as long as they want to, basically, within reason, right? There's a lot more cards out there that PowerPacks hasn't bought yet. Okay. There's a lot of countries that can't even buy them yet, right? And so the real materiality threshold that I think will cross first is the top line sales number, which again will never be shown in GameStop's numbers. It's not going to be shown in GameStop's net sales, but we'll see the disclosure in GameStop's 10Qs of PowerPack sales. The only thing we're going to see on GameStop's financials is in this line here, other income, which in quarter three was $3 million. By the way, I don't think all of that is Power Packs, but it could have all been Power Packs. But probably it was not all Power Packs because if it's a 50-50 split, there's two reasons why it probably wasn't Power Packs, all Power Packs. If that $3 million of other income is based on GameStop's share of Power Packs, and if GameStop has a 50-50 share of Power Packs, then that means Power Packs would have made $6 million in net income. But if PowerPacks made $6 million in net income, that would be greater than 10% of GameStop's operating income, right? It would be greater than 4.1. 6 is greater than 4.1. So materiality actually would have occurred. The other reason why I think the full 3 million of this is not because what you could say is, well, what if GameStop actually has 80% or 70%, right? If GameStop has 80% or at least 75% of the deal, then you could say that all of the 3 million in income is from Power Packs, but GameStop's portion of Power Packs is 75 to 80% of Power Packs uh, enterprise, in which case the total income for Power Packs would only have been $4 million. And if it was only $4 million, three of it attributable to GameStop, the materiality would not have been reached. That is possible. It's possible that it's the percentage is actually skewed in GameStop's direction. However, I'm still going with it's probably a 50-50 split because again, if all 3 million of this net income was GameStop's portion of Power Packs, then GameStop would have had to increase their other non-current assets by that same $3 million. And their non-current assets um, the quarter prior were at 53.1 and they ended this quarter at 54.2. So $1.1 million increase to other non-current assets, meaning GameStop's portion of PowerPack sales was probably at least $1.1 million in earnings, but probably a little bit more than that because other non-current assets have been decreasing like quarter over quarter for years, right? In April of 2023, it was 78 million. The next year, it was 65 million, right? The next year, it's down to 50 million. It got down to 50.5 and then up to 53.1. What happened? What shifted? Well, digital power packs launched in Q2, actually, July 29th. So why did digital power packs launch 2 days before Q3? So that GameStop could sneak in their asset, their contribution, their equity investment, their asset value attributed to digital power packs in their non-current assets off the jump. So GameStop likely funded 2.5 million off the jump or so to get power packs going and contributed another 17.5 during quarter three. Very interesting stuff. The other thing is, again, how much of that decline in the other non-current assets continued? I'm, I'm diving into it because I want to. I'm not diving into it. Just giving you a whetting your appetite because I want to hear y'all's thoughts as I start to dive further into this in future videos. But again, 53.1 in other non-current assets up to 54.2. So it's at least a $1.1 million increase, likely attributable to digital power packs, but it could be greater than a $1.1 million increase if other non-current assets within this line actually decreased, right? It could have been that the other non-current assets decreased by 1.9 million and the power packs portion actually is that full 3 million. And so the net quarter over quarter difference is a positive change of 1.1 million. And if that's the case, then GameStop does have at least a 75% ownership in power packs. Very fun stuff to think about. Obviously, we don't know yet. We don't know, but I'm giving you guys here are the metrics, right? Here's how we're going to find out quick in the coming quarters what GameStop's percentage of the partnership is by tracking these different figures within their balance sheet. Even if materiality isn't reached within Q4 or within Q1, when we see the changes on GameStop's other net income, on their investment asset value within their other assets, and on their non-store related SG&A, and on the cash outflows invested into power packs, we will actually have a pretty good idea on um, what power packs is doing. So super excited about it. Let me know if you learn anything in the comments. Now for the sub club, okay, it's kind of wow. Thanks for the three of y'all that just joined. I'll make it quick, okay? Thank you for learning today. I do appreciate it. Also, thank you to those who contributed to a mic on my quarter three earnings live stream. I get paid for that like January 21st. Okay, is when YouTube will send me December earnings. So, a lot to look forward to here on the channel. Towards the end of January, I will have funds to buy a mic from GameStop and increase my audio quality just for you guys as a thanks and a cheers to a great fundamental story and to telling that story in a level-headed way. So the sub clubs. So we started with the Y2. So here's the thing. I like to set subscriber targets as a fun goal, right? That's the one meaning of the sub club is as it relates to the subscriber count in the channel. But I like the numbers to have meaning not just as it relates to subscriber count, but I like the number to have meaning within the title of the sub club. Like, what is the significance of the number to the title? And then what is the significance of the number and the title to this period in history by which the sub count was in this range? So let me explain it. And if you like this, thanks. I'm just solving puzzles. I'm creating my own puzzles and solving them over here. So the first sub club was a Y2K sub club. It was a goal to get to 2,000. So it was, the number's 2,000. That was the sub count we were on a march towards. Y2K. What's Y2K? Well, it's the all the way from 0 to 2,000 subscribers. So Y2K is kind of representative of all of human history, right? All of these days where, if I were to go to Lifetime, you know, all of these days where I had no subs and then 12 subs and then 100, 200, 300, 400, and then Q2 earnings kind of launched me towards the 2K figure. So the Y2K sub club is kind of a nod towards like pre-video game era leading up to the N64 and the GameCube, which were nestled on either side of the year 2000, right? Y2K. And as a like as a relation to that, it's a nod to my dormant channel, right? All the years of prehistoric human life, and then all of a sudden Nintendo, right? So with Y2K, it was all of a sudden N64 and GameCube changed the trajectory of video games forever, honestly. And with my channel, is all of a sudden the Switch 2, right? Changed the trajectory of my channel forever. Nintendo came in and gave me some exciting, epic numbers to report on, and my coverage of Q2 earnings lifted my channel towards that 2K sub count. You tracking? Y'all never knew there was that much meaning here, did you? The next sub club was the 2525 number, which I titled the Halo sub club. So, Halo, what's the significance of 2525? Of course, 2525 subscribers. Why does that relate to Halo? Because 2525 was the inaugural year of the Human Covenant War. Um, why does that, and we, as far as the period in my channel, that that 525 people subscribed during, it was the quarter which the new Halo 3 game was released. But more interestingly, it was catalyzed by it was the quarter where the White House tweeted the uh, Halo picture, right? So the Y2K shout out to Nintendo and a shout out to the Switch and the Switch coverage in that period of my channel. The Halo Sub Club was kind of the period in between Q2 and Q3 earnings where we hit obviously 2525 subs, but the White House tweets the Halo picture. So what is the next sub club? The next sub club is the Pokey sub club. The Pokey sub club. What's the number? The number is 3,776. 3776. That's what we're going for. That's the new march we're on. Anyone who subscribes today, all the way until 3776, you are a part of the Pokey Sub Club. And if you're a member of the Halo Sub Club or a member of the Y2K Sub Club, then you are also an honorary member already of the Pokey Sub Club. So congratulations. You just get extra bragging rights because you were here earlier, right? You were here when the channel was only there, right? That's kind of the whole fun of it. So 3776, how does that relate to Pokemon? Well, everyone knows that is the height of Mount Fuji. And Mount Fuji is obviously significant. You're talking about Mr. Fuji in all of his great wisdom. And you're talking about the is it pronounced Johto or Yoto? Right? The Johto region. I always said Johto as a kid. But when I was playing like Pokemon Crystal, I think that's Johto. Anyways, Mount Fuji is an inspiration for characters and geographies within Pokemon games. 3776 is the height of Mount Fuji. Now, how does Pokemon relate to this era of Budget for Life and this era of GameStop coverage? Well, in more ways than one, but obviously This is the period where lunar packs were launched. This is the period where GameStop's collectibles really began to increase up and to the right, right? Explosive year over year growth on the backs of collectibles, particularly driven by Pokemon TCG, Raw, and Ungraded. So it's a nod to Pokemon. It's a nod to this portion of GameStop's livelihood. And when will we reach that? I don't know. I think, as a goal, maybe before next earnings. Maybe before next earnings. I'm not always committing to tranches that will be on pace to cross at those specific periods of time. And I don't know. I haven't really done the math. Like, is another 1,100 subscribers in the next 4 months likely? Or is that, are we already saturated, right? Have we already met anyone out there who's interested in fundamental analysis of GameStop and maybe other companies too? You know, so far I haven't found any others that are fundamentally as attractive, but it's not because I'm not looking. So, anyways, that's the next sub club, the Poke sub club. If you have joined since 2525, congrats! You're part of the Poke sub club. And if you haven't subscribed, think about it. All right. Sorry that took so long. That's why I said at the beginning that I would save that for the end. Okay. That's all I got for y'all today. I will see you in the next one.